Welcome back, class. This is the second part of the subtopic of income tax, which is under the wider topic of commercial arithmetic 2 that we learn in Form 3. In the first part, we had defined a few terms that are associated with income tax. Income tax, allowances, basic salary, relief, and all that. We have defined a few terms related to income tax. In this second part, we do more of the same. We're going to define a few more relevant terms and we'll be giving any relevant examples to help us to understand them. So for starters, we are going to define what we call gross tax. Gross tax is the total amount of tax that's supposed to be deducted from the earnings that have been gained, or from what we call the taxable income. Taxable income, of course, is the basic salary plus allowances, what is supposed to be taxed. So what is taxed, what's supposed to be paid, is what we call gross tax. But in the first part, we talk about relief. So sometimes we're supposed to pay a gross tax of this much, but some of it is supposed to be given back to be rebated back to the worker as relief. So because of that, we end up having what we call net tax. Net tax is the total amount of tax less total relief that was to be gained. So someone is supposed to get, let's say, insurance relief. The same person is supposed to get personal relief. Maybe the same person is supposed to get family relief or child relief. The total amount of relief you subtract from the gross tax, which is supposed to be paid, so you end up having what you call the net tax. That's what is now going to be paid. There is a situation where someone is working for an employer, and this person is not given what you call house allowance. However, he or she is provided with the house by the employer. And in this situation, the house may be provided in such a way that the person is not supposed to pay anything, or there's a provision that is supposed to pay some amount of money, which is what we call nominal rent. Now, understand why you call it nominal rent. There could be a house, a very good house, worth 50,000 Kenyan shillings rent every month. But if your employer provides you with such a house, you only pay a rent of, let's say, 10,000 Kenyan shillings. Sometimes you don't pay anything at all. So when the employer is given a house, they may either not pay anything, or they pay a slight amount as nominal rent, which is supposed to be used to maintain that house. It is used by the employer to maintain that house, to do some painting, repair, do some plumbing, and all that. So it's called nominal rent. Just a small amount of what is actually supposed to be paid as rent. Now in this case, when you're calculating the income tax that's supposed to be paid, you add 15% to the basic income. Then subtract the nominal rent if it is there. And then you add the allowances if there are any allowances. Now let me write this on the board so that we can understand. Let's have a situation, for example, let's take that our worker here is earning 150,000 Kenya shillings monthly. And then this worker is given a house by the employer. The employer provides this person the house. And maybe he pays a nominal rent of 20,000 Kenya shillings. So how are you going to get what you call the taxable income for this person? This is how we calculate it. So in this case, the taxable income will be found by taking the basic salary, then you add 15% on top of the basic salary, which means you multiply by 115%. Then, if there's some rent paid, you subtract nominal rent. Then, if there are any other allowances, you add the allowances. Okay? So, most of the time, taxable income we've said is basic salary plus allowances. But if the person is given her house by the employer, to the basic salary, you add 15%. If there's nominal rent being paid, you subtract the nominal rent, then you add any of the allowances. Like this. Any of the allowances that are there to get what you call the taxable income for this employee in that case. I hope that is very clear. If the worker is provided a house by the employer. Now, the other term that will be very common with that is paye. Pay as you earn. Pay as you earn. That's what is commonly used in Kenya. In Kenya and in so many other terms, the more you earn, the more you're supposed to pay as tax for a different level of money earned. Presently, when there was this outbreak of coronavirus, we understand before it used to be that anybody who's earning about less than 12,000 Kenya shillings every month is not supposed to pay any pay as you earn tax. But above 12,000 above, you're supposed to pay some tax depending on how much you're earning. But because of the outbreak of coronavirus, one of the ways that was given by the Kenyan government to stimulate the economy was to raise that minimum up to just below 25,000. So anybody who's supposed to be earning 24,999 Kenya shillings for this period when you have the coronavirus is not supposed to be taxed. But any amount above that, and you're supposed to pay tax again according to the level. That's what we call pay as you earn. So what is this? It is a system used in Kenya as is required by the law to deduct income tax from the earnings of workers beyond a certain level and to remit the money to the relevant income tax department at Kenya Revenue Authority, commonly called KRA. So pay as you earn, is a system that is used in Kenya as is required by the laws of Kenya to deduct some income tax from the earnings of workers and up to beyond some level, and to remit that money to the relevant income tax department of Kenya Revenue Authority. That is very important for budgeting of the Kenyan budget to run government departments, pay teachers, pay police, pay doctors, nurses, build roads and all that. If it's not enough, normally government will borrow from what they call bilateral donors or IMF, World Bank, African Development Bank and all that. But that's how the government, like the government of Kenya, funds its budget from income tax, that is, and from from workers. There are other ways that Kenya will earn its money from import tax, call it customs, and other things. Then we have what we call tax bracket. Tax bracket is an arrangement in tabular form showing the rate at which a certain amount of earning is to be taxed. And this rate could be in form of percentage or Kenyan shillings per Kenyan pound. Now Kenyan pound is a currency that was used when Kenya was under British colonial rule. The British used what called sterling pound. And they put a marker that one sterling pound was equivalent to 20 Kenya shillings. So we talk about Kenyan pound, it simply means 20 shillings. So how many shillings is charged for every 20? That's the rate that can also be used other than percentage. So let me draw here what a tax bracket should look like. We have a range of earnings, let's say in Kenyan shillings. Rates in percentage. So anybody earning a shilling up to, or like in this case, let's say in the case of Kenya, from 25,000 up to 30,000. They're supposed to pay, let's say, 10%, say 5%. Anybody earning 30,001 shilling up to 35,000 shilling supposed to pay, let's say, 7% in that range or in that bracket. Anybody earning 35,001 up to 40,000 is supposed to pay, let's say, 9% rate. So this is what we call the tax bracket. The tax bracket, from a certain minimum to a certain maximum. And in most countries, the more you earn, the more the percentage which is being charged. There are times when the rate is expressed in terms of what we call shillings per pound. Kenya shillings per Kenya pound. And then maybe they'll write 2 shillings. Here, 3 shillings. Here, 4 shillings. That means between these ranges, it's about 5,000. You'll pay 4 shillings for every 20 Kenya shillings. Okay, that's that. So what have we been talking about in the entire lesson? We have talked about what we mean by income tax. Amount of money is supposed to be paid to the relevant government authorities by anybody who is earning, a worker, a businessman, and all that. It's supposed to be paid to him. We have looked at several terms and a few examples to help explain. Okay, and I'll always leave you with this one. For you to be excellent in mathematics, you need to do 3 things: practice, practice, and more practice. So the class assignment for this will be in the KB book, page 102, just do number 1. Okay, it's a 6.5, page 102, do number 1 only. See you in the next lesson for more examples to help us understand this topic even better.